Welcome to part 2. I'd like to welcome back our special guest, the Citigroup banker. All 10 of you suck it! Oh, I didn't realize we were still filming. In part 1, we learned that there's 3 types of money. Fed funds, which is for bank-to-bank payments only, commercial deposits for the rest of us, and offshore Eurodollars, which is to avoid FDIC insurance. What I don't understand is why do Eurodollars matter if they're outside America? That's what I'm complaining about. Onshore banks are borrowing offshore to avoid FDIC insurance, regulation, reserve requirements, taxes. Yeah, if you thought foreigners were stealing our jobs, now they're stealing our debt. But we hedge this interest rate risk. Oh, you mean manipulate the LIBOR rate? What is LIBOR? LIBOR stands for London Interbank Offer Rate. Just explain it in English, you pea-brain. A Eurodollar is an offshore dollar. LIBOR is the interest rate that they make offshore loans. Simple. LIBOR is calculated from taking a panel of banks and getting quotes from them, then averaging those quotes and dropping off the highest and lowest one to ensure accuracy. Oh, so these rates are taken from their transactions? Nope, they make it up. It's basically an opinion poll. Why don't they use averages of transactions? Because then they couldn't manipulate it. During the 2008 financial crisis, they manipulated LIBOR lower to make it seem like they're more solvent than they really are. The actual transaction rate is like a woman's age. If you're dumb enough to ask, the number's cut in half. This system is taking advantage of the everyday American. So if you take out a credit card, often it's a floating rate interest tied to LIBOR. Let's say it'll be LIBOR plus 3%. What the bank is doing is they're saying, even though you're standing right here in America, we're going to charge you the higher, risky, offshore interest rate so that they don't have to pay FDIC insurance. So Donald Trump keeps going on and on about trade deals, but never mentions that half our financial industry is being outsourced abroad. Buy these Make America Great Again products at the lowest British interest rates today. And what's going to happen if the British pass more regulation? For quality Americans like yourself, you can borrow at the Zimbabwe mercenary rate. The government needs tougher regulation on LIBOR. More regulation? That's ironic because the offshore Eurodollar market was only created to avoid government regulations to begin with. You're saying, I only tolerate honest pricing for offshore smuggled bootleg money. Do you have history to back that up? In the 1950s, Russians had US dollars from selling oil, but they wanted to avoid that money being confiscated from tensions with America. This helped spawn the Eurodollar market. Now, ironically, liberals want to go to war with Russia, but ensure the accuracy of their interest rates. You bombed my village, but you could borrow the money to fix it at a transparent LIBOR. Then in the 1960s, President Johnson wanted to stop the rampant inflation from printing all the money for the Vietnam War. So to help control the balance of payments, he put on capital controls to prevent people from bringing money in or outside the country. But this, of course, backfired on him, and it spawned a vibrant offshore Eurodollar market. I'm putting in capital controls to control inflation. Okay, I'll move my money offshore, where I can create money without reserve requirements. Ah, shit. Because banks borrow in the offshore market and lend on the onshore market, they have to hedge against the risk of offshore LIBOR rising above onshore Fed funds. Okay. But the biggest banks are the ones that pick LIBOR. Do you understand why this is an issue? They're selling contracts to the market to hedge against the risk of a rate that they get to decide what that rate is. In fact, the cast of the movie Mean Girls said, "We fabricate totally untrue gossip, as well as wear such copious amounts of makeup that our entire persona is considered fake. But you'd have to be a fool to believe LIBOR. The LIBOR panel should be called the plastics." First of all, this video is ridiculous. Anybody smart enough to articulate the LIBOR derivatives market wouldn't be dumb enough to be liberal. Liberals understand the market about as well as Obama's stock-picking Solyndra. Yeah, bro, why don't you buy the dip? And secondly, I agree with you that it's a shame that LIBOR is manipulated, but I disagree that the government should be the one to decide. Ultimately, the people who are using the actual rate in the free market should be the ones to decide if they want to do business with it or not. I'll tell you the insane part. Because politicians thought that America was missing out on the Eurodollar business, they created offshore banking centers here in America. That's right. They can stay right here in major US cities and avoid FDIC insurance, taxes, major regulations like reserve requirements. You cheated on me. That's adultery. Come on, baby. You know I work in an offshore center. You work right on Park Avenue by the Times Square tour buses. Welcome to America. I'm your tour guide. Passing on your right is an offshore center where laws don't apply. The problem is not that banks are taking too much risk, but that money itself is based on debt. This creates a cycle in the economy where the asset gains of some require the debt of others. What does the concept of too much risk even mean? It's an abstract concept. So to you, the government can sell lottery tickets as long as you don't pay in Eurodollars. Well, the market is a form of gambling. Next, you'll tell me that Citigroup found their Native American ancestry, so they're justified in having an onshore Eurodollar center. And secondly, we need way more regulation on these offshore Eurodollar centers because they're using way too much leverage that could collapse the onshore market. Transferring your liabilities offshore defeats the point of FDIC insurance. It's like saying, oh, I'm not going to get cancer. I'm 20 feet from the building. That's my point. FDIC insurance shouldn't exist because it makes all banks the same when they're not. Some banks lend to riskier people, some more conservative, but because the government guarantees all deposits, it makes it the same US dollar and you're indifferent. I'm trying to remember what it's called when the government makes everyone the same. I can't remember. I don't get it. So you're saying they ought to be different? Of course they should be different. How else can the market decide if the risk is worth it? In a real free market, riskier banks pay a higher interest rate, so depositors can decide if it's worth the risk. Now, because the government guarantees everything, people pick a bank based on if their favorite bagel shop has an ATM. You bank there? I heard they lend to blind alcoholic circus acts. One guy signed his loan agreement in tequila and blood. Yeah, but they got a drive-through ATM. How can you be that lazy? We're driving to the gym. No amount of regulation will prevent market crashes because we have a debt-based monetary system. The very nature of fractional reserve banking is for banks to borrow in the short term and lend in the long term. This only works as long as long-term interest rates are higher than short-term rates. But as depositors deposit their money in later time deposits, it inverts this situation and all banks go bust. How is more FDIC regulation gonna prevent this? I am an official regulator. You cannot lend to anyone unless they have a good credit score, okay? And you have to do background checks. You cannot lend to criminals. That's a good rule. And you cannot lend to Russian spies or midgets. No lending to midgets. Hey, 1 second, I'm getting a call. Hello? It's a panic out here. Short-term interest rates have risen more than long-term interest rates. Our stock value has dropped to nothing. I've just received word. Our stock is worth nothing. God damn it, I told you not to lend to criminal midgets. Oh, these greedy Republicans stopped our regulation. Let's end the episode here. Can you both summarize your views? To summarize, me and the Republican both agree that it's corrupt that only banks have access to newly printed government money called Fed funds, which they then lend to us as it enters the money supply. But I disagree with the Republicans' laissez-faire view. Instead, I think banks abuse the Eurodollar system to enjoy the benefits of lending to the domestic American market, while avoiding FDIC insurance and any type of regulation. I disagree with the liberal that more regulation is the answer. Instead, a debt-based monetary system causes an artificial boom and bust cycle as more people take on debt, which leads to the asset boom of others. Then when they reduce that debt, everything comes crashing down. In addition, FDIC insurance causes people to disregard the risks that banks actually take. And by the way, you're a lazy bum, because I've been trying to get us to make an episode for months, but you just want to sit around all day and collect welfare. It hasn't been that long, maybe 2 weeks. You know it's been longer than that. It's okay, you can count on my numbers. I used to set LIBOR.